Time now to check out what's happening on the foreign exchange markets. We're seeing some strength coming through in the euro today. We've seen reports over the weekend out of Germany that suggest that perhaps a deal is being done to put together some kind of rescue package, perhaps totaling 25 billion euros. That's the number that's being talked about, to provide this money for Greece, to enable it to fix the issues that they have with their finances. That's been denied by the German finance ministry, but nevertheless it is putting a floor underneath the euro. You can see the euro dollar at 136.34, up by 1 0.2% today. George Soros, writing in the Financial Times, has been critical of the structure of the euro and the organisation that surrounds the single currency, really crystallising a lot of thoughts that many people have been telling us on this channel. And you can see that the negative effect that the Greece story has had on the euro over the last 2.5 months or so. Let's check out dollar yen, 91.62. Of course, focus later on this week is going to be on Ben Bernanke and what he says about the pace of tightening in US interest rates. But let's get an update now on the foreign exchange markets. Mario Singh is co-founder and CEO at FX1 Academy and joins us now from Singapore. Mario, thank you very much for coming to talk to us today. So George Soros has been very critical of the euro and critical of the lack of structure around it, really echoing thoughts that many other people have had for many years. Where do you stand on this particular debate?
Hi, Anna. Well, here's my thoughts, what's been unraveling so far. Well, because of the Federal Reserve, the hike in the discount rate has really been rattling the euro dollar for the last, say, 2.5 months. So that's been having a shock drop now for the euro dollar, so that's been heading upwards. But I'm likely to think now there's a central theme that's dominant right now in the euro dollar, and that's more for like profit taking rather than, say, a real drastic drop. So I'm still looking at the euro dollar at this point of time. I do hear what George Soros is saying, but at this point of time, I'm likely to think that it's more profit taking. We are seeing the euro dollar heading straight upwards now.
Okay, so if it's going to turn around and go higher from here, Mario, how high does it go?
Here's the key, and I don't feel that it's going to turn around and go higher. I still see that investors worldwide are still massively short on the euro dollar. At this point, it's because I feel the central theme right now, I'm starting to see a real shift in central theme. Sensitive to the market at this point of time, I don't see there's any cause for like risk aversion. But at this point of time, because we're starting to see the euro dollar heading up, it's more profit taking. But I am for the view that euro dollar is still going to be trending downwards. So it's going to be a big play right now on growth prospects in US at this point of time and growth problems in euro.
Well, speaking of which, we do have plenty of data points to look out for this. We have manufacturing data, we've got housing data, and of course inflation data as well. Plus, we've got Ben Bernanke speaking, giving his semi-annual speech. So in terms of the dollar direction, where is that going to take us?
I'm going to see dollar strength right now, Claudia. It's going to be heading up slightly. But as the 1 or 2 weeks pan out, because the markets are still trying to digest what Ben Bernanke has been saying about the rate hike, the discount rate, bearing in mind that it probably has no effect on monetary policies, I don't see the federal funds rate increasing at least for the next or until towards the end of this year of 2010. But the markets are starting to see it's like a cosmetic dress rehearsal now that's happening, and the buzzword around everywhere is really, are they going to start tightening monetary policies? So while I do see some dollar strength at this point, specifically to euro dollar, I still see it trending downwards, but more because of growth problems in Europe.
I see. And in terms of dollar yen, especially after the Fed discount rate hike, we see now there's increasing talk. The yen is the preferred funding currency. You share that view?
Yes and no. I still feel at this point of time it is both the yen and the US dollar at this point of time. But really the central theme as I'm watching, it is starting to shift now from safe haven. If we're going to look at a global perspective at this point, we're starting to see risk coming back up into the higher yielding currencies. We see the Aussie dollar heading upwards. But for the euro, I'm still inclined to think, I'm a little more cautious at this point. I still feel euro will start to trend downwards because of the dollar strength.
Right. And speaking of which, Aussie dollar versus sterling at a 25-year high at this moment. Appreciate your thoughts. Thank you so much. Mario Singh, co-founder and CEO at FX1 Academy there.